If you want to understand what a multi-trillion-dollar company looks like, look at Microsoft. They pull in over $300 billion in sales and pocket over $100 billion in pure net income every year. Amazon operates on the same colossal scale, with nearly $750 billion in annual sales, Amazon and SpaceX. You can see the market values are similar across the board, but look down at the bottom row. SpaceX has reached a $3 trillion valuation, despite bringing in just $19 billion in revenue, while operating with negative free cash flow. In a single day, a 20% spike in SpaceX shares generated more wealth for its CEO than Warren Buffett accumulated in his entire 90-plus years of investing. Retail investors are flooding social media with predictions of a $10,000 share price, treating the stock like a surefire bet. Meanwhile, Wall Street veterans are calling it a meme stock, built on science fiction promises of Mars bases and sentient suns. This $3 trillion market cap is the mathematical output of a specific mechanical trap hidden in the market's plumbing. SpaceX builds physical rockets in massive industrial facilities, but the reality of its stock structure is entirely engineered on paper. This pie chart shows the total volume of SpaceX shares. The remaining 95% of equity is locked up by early investors, making it completely untouchable. When retail demand hits, all buying pressure funnels into the 5% float, outbidding each other for scraps. In this environment, a $3 trillion valuation reflects the severity of the supply bottleneck, rather than corporate performance. In a normal market, when a stock detaches from reality, hedge funds step in to short it. They bet against the overvalued stock, acting as financial gravity to force the price back down to reality. But short selling requires borrowing of existing shares. With nearly all the equity locked up, institutional investors literally cannot find any available shares to borrow. Furthermore, options trading faced a delayed opening. This temporarily prevented anyone from buying puts, which meant traders had no way to legally bet against the stock's rapid ascent. This created a mechanical vacuum. Buy orders executed easily in one direction, but the door was entirely jammed for professional cynics trying to register dissent. When professional skeptics are mechanically blocked from participating, a stock chart stops measuring true market consensus. It instead begins measuring only unchecked optimism. Now, SpaceX faces a completely unique pressure: how to sustain a valuation that has outpaced its actual revenue by a factor of over 150. The company recently moved to acquire Cursor, an AI coding startup, for $60 billion. Crucially, they aren't using cash. They are paying with SpaceX stock. This acquisition is a frantic effort to close the gap with OpenAI and Anthropic. Despite the spacefaring hype, SpaceX's internal coding capabilities have fallen behind industry leaders, threatening its future automation goals. By issuing new shares at these peak prices, leadership is effectively printing a high-value currency to buy technical assets before the market cools. This strategy turns temporary paper wealth into permanent industrial assets, a vital move when a company's internal earnings can't yet support its own price tag. But artificial walls eventually fall. The immediate catalyst for the impending crash is the opening of options trading, which finally hands Wall Street the tools to bet aggressively against this valuation. This timeline visualizes the August 11th wave. A 20% block of lockup expirations releases millions of restricted shares into the public float. When this flood hits, it instantly shatters the constraints holding the price up, buckling under the weight of real supply. Once the mechanical scarcity is gone, the only remaining floor for the stock is the CEO premium, a valuation entirely dependent on a pure cult of personality. True financial literacy requires the ability to distinguish between a company's genuine business growth and a temporary valuation glitch engineered by market structure.